All right, so let's talk about weekly profiles and calibrating intra-week, and trying to get to that point with ICT content where it's like there's so much information there, but it really can be pretty simple. So intraday profiles, that's my jam, that's my focus, and using tools that will help you to calibrate to choose the right profile is what this whole thing is about. So there are three ranges that every weekly profile or intraday profile trader should have or be aware of. Previous week's range, Monday's range, and the previous day's range. Now this is a weekly chart, and this range here is simply the previous range, and we're going to use the week ending June 17 to 21 of 2024. So previous week's range, high and low. Now there's a lot that can be said on the weekly chart. We'll get back to that in a second, but for now, simple as that, previous week's range. So here's the week in full from Monday through to the 24th, Friday. So during this week, we had a holiday, Juneteenth, right here on the 19th. But let's just pay attention to what type of profile was shaping up. So Monday's range, we need Monday's range to frame the rest of the week. So typically not trading on Monday if we're just trying to capture the week's range. Now Monday did have a massive run up in its own model, its own portfolio, but focusing on the intra-week, we can see that we ended up with a Thursday high. And the Thursday high ran below Tuesday's low, which is as expected. These are the two versions of a Thursday high profile. Both of them are described as having something of a consolidation from Monday through to Wednesday, with price then running buy side on Thursday and then taking Tuesday's low, potentially staying bearish throughout the rest of the week from Thursday to Friday. So using the content of ICT's ranges, so one trade setup for life or the OSOC model, price action model 9, we want to be aware of our ranges. Where are we in price? So we're calibrating to not just where is price coming from, but where is price going. So if you spotted this Thursday high, the next thing you'd want to simply be aware of is putting down these ranges. Now the good thing about these ranges, these three, the previous week's range, previous day's range, and Monday's range, is that they're already done. You know where they are. They're not like projections per se. There are ranges that you can see. They can't be taken away from you. So the next range to look at is Monday's range. So here's Monday's range in the gray from high to low. And so Monday's range frames out how the rest of the week is going to calibrate. So interesting things about the Monday range. You can use it to set up the manipulation. So when price crosses over Monday's range here, we can get into London. London leads into New York. New York wicks below some sell side but stays right at Monday's range. Does an expansion and then reverses. And on the flip side, you can see, and this is an hourly chart, when price starts to run through or return into Monday's range, how it will wick to respect, close to reject, retest on the Monday range high, and then execute the profile. Now you have to put them all together, because when you also look at the previous week's range, that can give you bearings to say, well, when price ran through it, there's an opportunity for price to return to it. So over here on the left, there's a fair value gap, but paying attention over on the right, we can see how price came and respected it. So we're going to look at the chart and start piecing some of this together. So let's put all these tools onto the chart and just walk through what this looks like from a daily perspective. So Monday's range works its way through, and once we see Monday's range broken here, then we're anticipating using Monday's range to frame one of the weekly profiles. Now Tuesday through Wednesday, with Wednesday being a holiday, prime times to just sit out. Holiday on Wednesday, the day before the holiday was a bit choppy, but you can see that it created a lot of liquidity. It's hard to sit out of trading, but using weekly profiles, oftentimes you have to allow yourself to really let the setup come to you. So again, what we're trying to do with this journal entry is simply calibrate. We're trying to calibrate throughout the week to help frame what profile is in play, and then we can go down to an example of a setup. So we're using Monday's range. We're also using a new week gap it's a bookmark, not a PD array. So as a bookmark, we're seeing that we're above the new week gap. The anticipation is to stay bullish. When we have a Thursday reversal profile, the bookmark can be a placeholder to say, okay, are we gravitating back towards that bookmark, which would make the week a doji week, or are we going to stay above it because we are more prone to be bullish because the new week gap is below us. So we have to keep in mind Monday's range. We go past the holiday, we see price run up, then we see price breaks below Monday's range, which gives us confidence that this is a Thursday reversal profile. So through 9:30 here, after the 8:30 news, we can see, okay, I'm anticipating this price action to trend lower, but I must be mindful that this is the previous week's high. So we're calibrating throughout the week. So we set Monday's high, we're watching price action. Now we get into the one that starts to really let you cook, which is going to be the previous day's range. So let's mark that out. If we are using price action from Wednesday, we want to let this price play out, and we can see before the New York open that price is demonstrating or exhibiting bullish patterns. When would we want to flip that bias? So we would flip that bias if price breaks below the previous day's high. Breaks and closes. Doesn't just wick it, but breaks and closes. So in the example here, Monday creates a high, Tuesday starts lower than Monday's high, breaks above it, retests it. So this is all Asia. We're waiting for New York for the highest volume for indices to kick off. As we get into indices here at 9 to 9:30, price wicks internal liquidity, stays below it's also internal, but stays below Monday's this is Wednesday's midnight low, and then we start to see movement bullish. When we see movement bullish, we can use whichever decision, this was an institutional order flow entry drill off this fair value gap, or if you want to look at this as the breaker entry here on this green candle because this is your sell side, whatever you want to use, you can then use that priming to say contextually, I'm above my previous day high from Monday through to Tuesday. And then as I break Tuesday's high here, now I can look for that retest into whichever discount array I would like to use, and then we're off to the races. Again, this is all Asia, so this is just framing for Thursday's price action. So let's look at that, and let's put up this setup for Thursday, which brings us to the last range that I think is super important to talk about, which is the previous day's range. Now it became much more relevant once we got past May 28th, 2024, but the previous day's range is what will help you to kick off your intraday trades. And the timing of these previous day ranges is going to be super important to any type of news event. So we're on a 1 hour chart. We're going to jump down to the 5 minutes. So we've got our framing, right? We've got a bullish bias, and we're waiting to see, are we just going to continue with a Monday low type of profile? What would give us the framing to look for any sort of reversal? Let's go down to the 5 minute. And here's our Thursday high profile. And when does it get confirmed, activated, put into play, whatever verbiage you want to use. So here's the 8:30 news event. The 8:30 news event drops below previous day's high. Once the 8:30 news event drops below the previous day's high, our framing is now looking for a Thursday high because we're coming back into the previous day's range. Now we're using the hourly chart to mark out the timing, and the hourly chart would have given the high here. You'll notice that on the 5 minute chart, it doesn't give you the exact same framing. So time frame alignment matters. So 8:30 news kicks off, we shift below previous day's range. We have a PD array, but the key thing here is to simply watch and respect the fact that when we open equities, we do a Judah swing up to the previous day's range. Screen. And then we start to displace. So watch the price action movement here through the AM session. Judah swing up, internal liquidity, stop loss would be above. We have a fair value gap that gets revisited. body, reject, shift, return into a fair value gap 2022 model, right at 930 is opening price, and now we're starting to distribute. Now the distribution is always going to take the swing preceding the drop. So you're measuring off of your two pivot points here, so swing high, swing low for your projections. And you're using the weekly profile to say, well, if it's a Thursday high, I'm expecting it to go below Tuesday's low. So here's the sell side liquidity on Tuesday's low and the 3 projections dipping into the H1 fair value gap that broke previous week's high. So through lunch, it just drops. It doesn't give a lot of opportunity to get down to these projections. In the PM session, the only play that was relevant was caught between this fair value gap inside of the lunch range displacement and coming back to one of the projections, which also represents this order block. This order block in a PM session setup will require price to take a bullish stance, but it's not taking any highs because the day's movement is a Thursday high. The day's profile is a Thursday high, and the intraday session is a 2-session down close. So I don't know if that's a lot of information, but throughout this journal entry, there's been a lot of exposition as to how and why these profiles play out. So if something's not super clear, or if you're following along with this journal entry, you can feel free to kind of check out any of the other videos if it helps you. So price nature ends for us at 3:55 into the 4 o'clock hour, and you can see that when price dips into this H1 fair value gap, even through Friday, it wants to stay bearish because the profile is calling for that, but we have a higher time frame range or anchor in price with this weekly high. So when price wicks into this weekly high on the New York AM session and fails to close below it, then the only thing is, it's like a tug of war. It's like, it's just like, I want to go lower, but I've got this anchoring in price that's the algorithm is just going to hold price consistent, and it's just holding it there because the macro is trying to push for bullish, but the profile is calling for bearish, and so it's not a surprise that it is basically in a tug of war consolidation. Let's jump back up into the H1 and close off this journal entry. So that's that Thursday setup off of a Thursday high. We're looking at these price action tools, and the 3 ranges we talked about today were the previous week's high, previous day's high, or previous week's range, previous day's range, and Monday's range. Monday's range is super key. So let's close off on that with this, simply to say, without any of those intraday framings, right, to try and get down to an actual trade, when you look at these ranges and you consider yourself intraday profile, ICT intraday profile trader, intraday profile, weekly profile, and you're looking at ranges, you always have to consider the thing and the inversion of the thing. So ranges can break, retest, and continue in the direction of the break, or they can invert. They can break, invert, and then continue in the direction of the inversion. So this is an example where price will break bullish, retest a discount array, and continue bullish. So just using this price action here, ignore the fact right now that this was a holiday, but the price action is the point, right? So when price revisits this breakout, so here, right, you have your sweep here, or sweep here, shift, revisit, breakout, entry, run. That's where price is going to break, retest, and continue in the direction of the break. But on the larger scale of things is Monday's high and low, which in itself doesn't look like a consolidation. It is simply a range, a time-based range from midnight to midnight for the price action on Monday. When price breaks it lower, retest the inversion of that level, so the flip side of that level, and continues bearish. So you also want to factor in, where are my 50%? So where is the half of the range? So you can see on that Thursday run, when price was taking that Tuesday low sell side, where did it reach for? It reached into equal parts this fair value gap on the hourly, which is down in discount, and also 50% of that range, which is the yellow line, and then rejected. So a lot of really good insight there in terms of tackling ranges, and we'll log this one in the journal entry, and yeah, we'll do it again.